Hi, this is Robert Clinkenbeard with the Commercial Landscaper Podcast. We're going to take 20 minutes of your life to deliver some amazing content from accomplished leaders and business owners to provide you with some value to help you scale your business, become a better leader, and push yourself out of your comfort zone into something which is going to stretch you. We really hope you enjoy these shows, and we really encourage you to like and share with your friends and network, which is only going to help us get a wider audience and improve our industry. I'm super excited to announce that in 2023, we're going to be announcing new partnerships, digital courses, some rebranding, and your opportunity to be coached by one of our many industry leaders, experts, or coaches. Cheers, everyone. Hi, this is Robert Clinkenbeard with the Commercial Landscaper Podcast. I'm really excited to be joined today by Jeff Harkness. Jeff is with the 3 Point Group, and I know we've been trying to catch up for a while to get you on the show. So finally, I'm glad we managed to get you on, Jeff. So welcome to the show.
Yeah, Robert, thank you for having me, and excited to be on with you and talk about the industry that we love so much together. So thanks for having me.
Yeah, absolutely, Jeff. So, Jeff, just so the audience know, I think we've, as you mentioned earlier, we've known each other almost like indirectly through compliments coming from other great industry leaders. But so the audience knows, just tell the audience about your background, how long you've been in the industry. So I'd love to hear that.
Yeah, no problem. So yeah, we're down here in Atlanta, Georgia. We're in the consulting and mergers and acquisitions business. So we predominantly work with green industry, snow and ice, tree care companies, fertilization and weed control. And as you know, Robert, that's been an exciting world over the past 5 or 6 years with all of the M&A activity, where you've had strategic buyers and private equity groups making investments and acquiring a lot of companies in our space. We do it all over the country, and we do it, in Canada as well. And so we've been excited about. I tell people all the time, we're very blessed to be working with great companies within a great industry. And certainly there's been a lot of capital and a lot of interest, money coming into our industry. And we're thankful to be involved in that. I'm a dairy farm kid from upstate New York. It's why I love the industry and been at it here about 30 years. And we got a great team here in town. We have a staff of 7. We have a number of CPA and auditors in-house on staff. And, when you're in the M&A game, Robert, there was a time where I could just jam deals through from a business perspective, but given the millions of dollars that have been invested in the space, we're dealing a lot with Big 4 audit firms and national law firms. And, I don't say that it's getting any easier, but we think, we've been really blessed to be involved in a lot of great transactions and, great people. At the end of the day, it starts with great people, and we've been fortunate to work with great people and great companies. So excited about what's coming next, right? 2023.
That's awesome. Yeah. And that's going to be one of my questions coming up. But what would you say is probably one of your biggest differentiators from some of the other M&A type companies out there? What do you do a little bit differently?
Yeah, I think it's probably 2 things. Number one is there's nothing more frustrating for an owner to go down this type of path and not get a deal closed, right? So certainty to close is very important. And with the owners that we work with, they've never done this before. So there's an emotional component to going down a path or this type of venture. There's a lot of metrics and analytics, right? There's taxes, there's debt, there's fees, there's deal structure. And so what we do in trying to differentiate ourselves is we spend a lot of time on the front end making sure that there's complete alignment and visibility to net walk away dollars, right? So that our groups and our owners know exactly what they're getting into. Certainly, when we run a very competitive process and feel like from a valuation standpoint, we're stretching and maximizing valuations for our owners on every deal that we're involved in. But there's a lot of heavy lifting with quality of earnings, right? With that whole accounting audit approach. There's a lot of heavy lifting with business compliance and legal compliance. And we do a lot of that work in-house. We like to quarterback that process. But for me, it would be if you and I were working together as an example, we're in complete alignment with deal structure, valuation, who the groups are that we're going to approach. And you have good peace of mind around the metrics and around the process that you're getting ready to engage in. And, I know you've gone through this as well with your company. We didn't have the opportunity to work together, but it's not easy, right? And going through this type of process. So we try to do a lot of things on the front end first. I think at times the search side of things and matching a buyer and a seller or a seller and an investor, that becomes the easy part. It's making sure that you can get through audits and that you have alignment so that there's no retrading or no expectations that have to change. And that creates a lot of negative energy and anxiety if deals are changing in the ninth hour or, you can't deliver what you communicated to your client that you say you can deliver. And so we're proud of our track record. We've done a lot of deals with private equity groups and strategic buyers. And, certainly the industry is frothy and we're continuing to be active in that space.
That's awesome. Yeah, that's why I have no hair left, because it's such a hard process. And my wife can testify to that. So
I understand.
Do you feel as though there's a gap between, if a fresh company comes to you, said, hey, they're interested in selling, maybe they have a number in their mind, but by the time you do your multiples, you do your calculations, you take off all the tax and some of the debt they have, there's just a big gap there, a big disappointment? Or what do those conversations look like?
Yeah, I think that I think owners and operators, Robert, in our industry, they're pretty educated on what's been happening in the space, right? So given there's been so many transactions, so many investments, I think owners have some general idea of what's been going on and what some realistic valuations have been. What we tell our folks is part of our process is if we're not ready, then what do we need to do to bridge the gap to be ready? So we've been involved in opportunities where, to your point, maybe the numbers weren't exactly where they needed to be. So rather than being a seller, we actually were a buyer first, and we did a couple acquisitions on our own. We were able to go out and secure capital for the client, and we became a buyer first to get to a scale or a level where the metrics do line up based on market conditions. And, I tell people all the time, when you've been in it 30 plus years, we're not going anywhere. And, we want to make sure that we get the right deal done with the right buyer or investor so that our clients have peace of mind. And then we're just very strategic and very metrics driven around that. And a lot of that is an education process. And a lot of that, Robert, sometimes is just a reality check on, you may have heard this rumor, but here's what's real. And then each business has value drivers and value detractors. And maybe early on in my career, I was a little more anxious to always make sure that you're pleased with my answers, Robert. Now that I'm an old guy in the industry, I'm just going to say, look, I think you're wrong, and here's why, and here's what we need to do together to get you to, the end result that we're looking for together as partners, right? And so, right. Is there some tough love there? Yeah, there's some tough love. But I also think that most owners are relatively sophisticated on what's been happening. They got friends and other peers in their peer groups and that have gone through transactions or have brought some capital in to grow their business or done some buy side stuff. So, the level of professionalism in the industry has been raised quite a bit over the past 10 years. And, we find that we can kind of hop in and have some really straightforward conversations that, aren't necessarily shocking because people are kind of aware of what's been going on, if that makes sense.
Yeah, that makes sense. Yeah, no, absolutely. So as you touched on earlier, the last few years have been a wild ride between, you've had COVID, you've had, work from home, you've had, a lot of people investing more into their landscaping, more residential. You've had, crazy increases in prices with wages and supply chain and all that type of stuff. So it's been pretty interesting few years and a lot of firsts for a lot of people. What does the crystal ball look like for 2023?
Yeah, I think that there's, there was some headwinds in 2022 for sure, right? As we talked about supply chain issues, rising labor costs. There certainly was some headwinds in 2022, and most of our folks were out in front of that, getting price increases and passing that on to the customer or the end user. I think on a go forward basis, we're not going to see quite the price increases that maybe we were able to get in 2022 as an operator. But in my world, there's just a tremendous amount of capital that's on the sidelines that have been raised from the various investment and private equity groups that needs to be deployed. And I feel like for those quote unquote A assets, right? We've been blessed to work with a lot of great companies that were market leaders in their market or in their niche. There's still a lot of capital out there that needs to be deployed. And even though returns will be eroded some with the cost of capital from an interest rate standpoint, in a buy and build strategy, if you and I are working together today and we bring an investor in or a private equity group, by the time we transact 3 to 5 years from now, it's likely that we'll have a different debt facility. It's likely that we'll refinance our capital. And so I think that the access to capital side of things, even though the debt market is tougher than it's been in years past, we still see a lot of demand for companies wanting to partner and invest in our niche. And, there was a time you and I would say, you can't do it with snow and ice companies. You can't do it with tree care companies. You can't do it with residential design, build, maintain. You can't do it with, lake pond management, right? And guess what? With the amount of capital that's out there and with the elements of our industry around reoccurring revenue, opportunity to expand with technology, Robert, we don't do a great job with our organic growth. A lot of our companies just answer the phone. They don't have a business development team or a sales team. Right. Still highly fragmented. There's still a lot of small companies. I mean, if I could line up, $10 million EBITDA companies right now, we have plenty of capital that would want to invest in them. What's the challenge is there's still a lot of companies that just aren't mature enough to some of those EBITDA levels that warrant, institutional investors to come in and do something. So I always will continue to bet on the essential service component of our industry, like we saw in COVID. I'll continue to bet on the people, bet on the business models. I mean, you can't just stop taking care of properties, and you can't just stop, doing work when, customers, whether residential or commercial, need to continue to invest in their properties. So our expectation for 2023 is candidly business as usual. Right now, based on our pipeline, we're not seeing anything that would limit our ability to continue to have another great year in 2023. I think we saw some headwinds in 2022, like we mentioned, but I'm optimistic that our industry and the opportunities that we have in the space will continue in 2023. And look, our guys have been through recessions before. Our guys have been through COVID, and that's what makes the industry great. Is we've kind of proved as an industry that we can go out and continue to perform and grow business even during what's perceived as slower times, and that's been proven historically, and that continues to be my expectation moving forward.
No, and we've obviously talked a little bit earlier about that, and I have the same opinions after talking to various people. There was one conversation I had a couple of weeks ago, and he was owner of a large, probably one of the largest SBA funding companies, and does some other financing. And even though, the interest rates are now at some of the highest levels for many years, he's still seeing all that available money. He's still seeing the deals being done. He's not seeing any slowdown. I mean, he anticipates maybe some headwinds Q3, Q4, but it says, as you say, business as usual right now. So interesting how similar stories going throughout. And he deals with multiple different types of companies, not just the landscape industry. So pretty interesting.
Yeah, I agree. And again, I think that, I think you'll see it in the stock market, and you'll see it in the debt market as well. I mean, look, all these interest rates have been raised as a result of inflation, right? With being driven by all the money we were printing through, some of the COVID relief stuff, right? So I believe that as inflation slows down, you're going to see an opportunity for rates to come down. But understand the premise that is private equity investor, right? I've raised capital. I'm raising $250, $300, $450 million, $500 million funds. When I raise capital, I must deploy capital, right? And my expectation has been, if I invest $1 million, if I can get a 2 to 3x return on my $1 million investment over a 3 to 5 year time period, then I would take that as an investor. What our industry has been producing has been 3, 4, 5, 6. I mean, I talked to a guy that we did some work with in a gate company, and they got a 10x return on their money, right? So when you have capital, you got to deploy it. You still got to invest in good industries with good leadership teams. And I think over a 3 to 5 year time horizon, although the cost of capital is up in the debt markets, that's probably going to be more short term than long term. Our biggest challenge together, Robert, as industry professionals, is we need to help these companies grow their EBITDA and get bigger, right? And get into that 3, 4, 5, $10 million EBITDA range. When you're in that range of EBITDA, you got a lot more options, as you well know.
Yeah, for sure. For sure. That's really interesting. What are some of the challenges you see with some of those companies? Their struggle to get up to that $3, $4, $5 million EBITDA. Is it not thinking big enough? Is it just not being in that space before, in terms of either having a good sales team or hearing too many horror stories about smaller tuck-ins?
Yeah, I think that I still think in the industry we're maybe a C plus when it comes to organic growth, right? A lot of companies, um, they don't necessarily go out and be aggressive in how they're going to win more work, right? They wait for the phone to ring, or they've built a decent brand and people are aware of them. So, look, we've had guys and you've had guys say, look, Robert, I can go out and get more work, but I don't have any people to do it. Right. So being able to add talent at the foreman and crew level, and being able to add people at the middle management level, your account managers, your ops managers. Well, there's a reason these bigger companies are doing acquisitions, right? And that reason is, yeah, I'm getting customers, but I'm adding talent and I'm adding crews, right? So if I understand or have the ability to go out and get some deals done and some capital, have capital to do that on the buy side, man, I'm getting some great people and I'm getting some crews, and I'm kind of overcoming some of the challenges that we have of, gosh, it's hard to grow one customer at a time and one employee at a time, right?
Yeah.
And so, we believe there's got to be an organic growth strategy around pricing and business development and sales, and, who's the ideal client and how you're going to differentiate yourself. But I also think as an owner, you got to say, hey, can I be a buyer? Can I go out and acquire a $1, $2, $3 million business where I get 5, 6, 7 crews and a great account manager and a couple ops guys? Because I know if I run want ads or run standard recruiting, I can't get those guys to come in and work for me. So, what's the math and what's the strategy to grow through acquisition and a buy and build strategy, and then also have a aggressive or smart organic growth strategy in the business as well, right? And I think that we've been on this great economic run where the phone just rang all the time. Sometimes if things get a little tighter or a little slower, you got to revisit your process and revisit your strategy and kind of position yourself for that next run. And, we think that we have a lot of value with organic growth plans and acquisition plans, and that buy and build concept where, we could be working with companies that aren't ready to exit today, but we got to get them to a point where they're ready. And so we have some fun doing that and some expertise doing that, if that makes sense.
Yeah, no, that's great. Yeah, I think a lot of time, one of the challenges that I think people struggle with is trying to figure out, I think the challenge I find with acquisitions is merging of cultures. And I think that's just one of the big hurdles that people just need to go and head on into, figure out how to merge those companies, figure out, first of all, if there is, huge differences between the cultures. So I think that's one piece of it. But I think one of the things I've been on my soapbox for the last number of months, and it's just what's that recruitment strategy look like? I think gone are the days of the traditional ways of trying to find labor, either referral or through Craigslist or something. But there's now companies that are hiring a recruiting manager. I think they're putting more emphasis on that compared to an HR type manager. So come up with a recruitment strategy, because when you think about it, well, 50% of your costs are typically around labor or salaries. So if you put that same emphasis on that piece of your business, then it can overcome some of those hurdles. So great example is a good friend of mine. He was on my podcast a couple of months ago, Mike Brewer. He had probably one of the largest plumbing companies in Arizona, and he realized his biggest hurdle was the labor part. So he created almost like a Brewer plumbing university, and he would bring in, 100, 150 plumbers through this university program. And yeah, maybe he had a 50, 60% drop off rate, but that helped him almost double his size in business. And because of that, he had a really nice exit last year. So he saw the challenge, he addressed it, he invested in it, and it paid off. And I think a lot of people need to sort of maybe think of that along those lines.
Yeah, I would agree. I think the old strategies or the days where people just show up, they've been long gone. And it's just like anything else in business, right? You gotta have a strategy and a plan, and growing that team and that workforce is a full-time commitment, right? And I still think that we're probably behind the curve some with, compared to other industries. If you look like, to your point, the plumbing industry, the HVAC, some of these other facility services companies, compared to what we see in the green industry, snow and ice, tree care, turf care, that sort of stuff. I think there's opportunity out there, and you can't just come in every day and close the door in your office and not be aggressive on your processes and your strategy. So I don't know. I think that man, it's fun though, isn't it? I mean, despite the challenges, it's still fun.
Yeah. I mean, I think, I've been following the M&A space for a while and got involved in different types of mastermind groups, but it just seems to be so much activity out there, so much more interest in people having their own business, moving out of the W-2 type job, not just in our industry, but in multiple different industries. And, they're looking for that, not that perfect company, but that somewhat recession-proof company that's just giving them a good cash flow, and they could switch away from being, working for somebody to, living that entrepreneurial dream. So it's just refreshing to see.
No doubt. And like we said, I think that, there's capital out there that is going to continue to want to find a home. And, that's kind of part of the American dream is, can I build a business? And at what point in my business do I say to myself that I don't want to leverage my personal financial statement anymore, and, want to balance some risk considerations. I mean, look, when you have unlimited access to capital, right, versus limited capital based on a personal financial statement and what we would term traditional senior debt, right? Those traditional bank relationships, when you have unlimited capital, that doesn't mean that there's not significant accountability with that capital, because there is, but you can scale a business a lot quicker, right? When you have institutional capital behind you. And the challenge is finding the right partner and the right time, and making sure that the metrics work so that you can continue on. I mean, you talk to some of these folks that have been involved with multiple recaps in the industry, they're creating multi-millionaires along the way with these recaps, even some of the big strategics that are in our space. So we just find, Robert, that educating owners about the concept of private equity and institutional money, mezz debt, senior debt, angel debt, most of the owners in our space, they're not versed with those concepts, right? And I think the more that we educate our owners in the niche around the different money sources and the different metrics around capital to scale and grow a business with, certainly we've seen it done well. We've seen it done wrong in the space, candidly. But at this stage in our career, both you and I, we enjoy the education process of it, right? It's the more that I and we can educate people, it just creates opportunity for us too, and that's win-win, right? I mean, we've had a front row seat, both of us, of how it can go really good, how it could go really bad, and just how much that's changed over the past 5-6 years. Getting out there and educating our owners is something we enjoy and will continue to do.
No, for sure. I've got time for a couple more quick questions. On that point, I mean, do you think there's just, I think just maybe a lack of knowledge or understanding that prevent owners from coming to a firm like yours earlier in the process? I mean, I'm sure probably companies come to you and say, hey, I want to sell in, I don't know, 3 or 6 months. But if they established, some type of relationship a year, 2 years before that, they would just give them a better chance to prepare, find out what their options were, just have a better understanding of the process.
Yeah, I would agree. I think the perfect scenario is, 6 to 12 months ahead of time so that we can position, plan, and strategize together. We have a lot of groups we're working with now that we're working a 3 to 5 year plan and a buy and build strategy. And I still find that owners in our space, they don't understand the game. They don't understand the metrics. They don't understand institutional capital, the pros and cons of it. Things that seem relatively simple, like, what type of organic growth rate should we model and what should be the expectation? What about retention rates? So there's a lot of metrics and a lot of education that I still don't think we're up to speed yet in the industry, right? Because institutional capital, in the grand scheme of things, being able to access it and partner with it, it's still a new concept just over the past, 3 to 5 years. And so I would say the average operator doesn't understand the metrics in that game. And we think we do a good job of painting that picture and then saying, hey, is this the route that you want to go? Whether it's 6 months, 12 months, 3 years, 5 years, there's a lot of fundamental strategy and concept there that I think our average operator, either doesn't know or doesn't have access to that data. What they have access to is a buddy in a peer group or some things that they've learned in a peer group, and in the peer group world or the friends and family world has been great. But the concept of institutional capital, return on investment, risk, and just all of those things, it's still relatively new in the space. And we think that, like we said earlier, it's not going away anytime soon, right? It's going to continue to be there. So I'm looking forward to that. And I'm not getting any younger, but I'm still having a lot of fun. And
that's good.
We got a great team, so we're enjoying that run. Yeah.
So how do people get in touch with you? How do they learn a little bit more, get better educated about the process? What's the best way for them to get in touch with you?
Yeah, I mean, we get a lot of referrals. So, LinkedIn, email, check out our website, 3pgconsulting.com. And, I'm out there. If people want to get in touch with us, whether it's 3 Point Group or Jeff Harkness, typically we're out there enough in the different social media world that somebody can track us down. And like I said, just great to catch up with you and beyond. And, we got a lot of friends and a lot of similar acquaintances, and just appreciate what you're doing with the podcast and, everything that you're doing in the space of the niche. It's good to be together.
Yeah, well, thank you, Jeff. Appreciate the time today, and maybe I'll make a trip down to Atlanta and we can catch up for lunch or something down there. So,
right on. I'll take you up on that. Make sure we get together soon.
Cool, awesome. Well, Jeff, thank you again for your time. Really appreciate your insights, all the knowledge that you share with the industry. So, thank you again, and we'll talk to you soon.
Thank you, Robert. Have a good afternoon.
You too.
Hopefully that was pure, dead brilliant for you today, and you got some great takeaways for your business or your leadership role. This is Robert Clinkenbeard, and we'd love to get you and your friends to join us in our future journey. So please subscribe through the various podcast channels or visit thecommerciallandscaper.com or brucewilsoncompany.com and check out some more information there. Anyway, hopefully you all have a pure, dead, brilliant day. Cheers, everyone.